Hi, this is Eric Dunavant with Dunavant Wealth Group, the Dunavant Wealth Recap for October 2012. Well, the September markets are behind us. The U.S. markets were up 2.4% for the month, and international markets were up about 3%. On the economic front, we continue to see the muddle-through economy. Home sales for the month were unchanged, but second quarter GDP was revised down to 1.3%, below our 2% we've been watching. We also saw durable goods orders down 13.2%, primarily from a drop in orders for commercial aircraft. On the good news front, business confidence was up 1.1% after 2 months of declines. Jobless claims remain under 400,000, and with all the Fed stimulus that's been done, it seems to be providing an underlying support for risk-type assets. In this month's news or noise, sometimes as investors we have a tendency to view the headlines of the day as a possible apocalypse or end of the world. And the media really helps to perpetuate this. The truth is, we can usually imagine the worst in any situation. And when we do, we have to be careful that it doesn't affect or derail our long-term investment plans. Why do I bring this up? Well, I've seen a lot of investors lately trying to tie the results of the upcoming election to the outcome of what they expect to happen in the markets. Now, there may be some effect from the market, but let's define some things. The markets are simply a place where shares of companies are bought and sold, and the values of those companies are determined by their sales and earnings. So for example, let me pick 3 random companies. Now these are not a recommendation, I'm simply using these as an example. But let's pick Procter & Gamble, Coca-Cola, and Apple. Now let's think about it. How likely is it that the sale of boxes of Pampers, cans and cases of Cokes, and iPhone 5s are going to be affected based on the outcome of this upcoming election? Now, I think there are important elements out of this election we'll want to watch, but we have to be careful not to extrapolate events too far beyond what they have the ability to affect. It really can derail your long-term plans, and we're here to help you stay on track. This month's True Wealth Tip, also coming up later this year, is a hot debate in the next few months over taxes. We know about some taxes: income tax, sales, property tax. It's the hidden taxes that you really have to be careful of because they can make your taxes a lot higher than you expect them to be. So what are some of the hidden taxes? Well, your employer pays Social Security and unemployment on your wages. At the pump, in Louisiana, it's 38.4 cents a gallon that are included in the price of your gas for taxes. If you fly somewhere, they have excise taxes, flight segment taxes, security fees. All of those are estimated to add about 20% extra to your flying expenses. And then when you get there, wherever you're going, it's been estimated in the top 50 U.S. destinations that the fees and taxes increase your cost by 56% on the trip. Now, sometimes we get frustrated over what we see and what we feel like we can control. But it's important to be aware of the things that we don't see so that we can account for all areas of our life. If you know someone who could benefit from this video, would you please pass it on to them? We'd be honored if you shared this. And as always, please send in your prayer requests. We love to pray for our clients every day. Securities are offered through LPL Financial, member FINRA SIPC. Investment advice is offered through Dunavant Wealth Group, a division of Cardia Planning, LLC, a registered investment advisor, and a separate entity from LPL Financial. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and, of course, is no guarantee of future results. All the indices are unmanaged and may not be invested into directly. Thank you so much for joining us this month. We'll see you again in November.